In this video, I'm going to describe one ICT model that I personally use in my trading, a rule-based model that focuses on liquidity, market structure, and precise entries, and that has consistently worked for me when all the rules are followed. So let's get straight into it. First thing I want you to know are the 5 basic rules of this model. The first thing we need is a 15-minute sweep of liquidity. To explain this, I want you to focus on this range here. We have buy-side liquidity resting above at these highs, and we have sell-side liquidity resting below at these lows. So what we want price to do for our first rule is to either sweep this buy-side liquidity or this sell-side liquidity. For example, if price does something like this and sweeps our sell-side liquidity, then we move to step 2. Now comes step 2. We have to predefine a clear draw on liquidity. That simply means if our sell-side liquidity has been swept, then we have a high here, which is our buy-side liquidity, and we have another high here. So these 2 highs become our draw on liquidity, and we are expecting the market to take these highs, something like this. Now comes step 3. We need a market structure shift along with a breaker block on the 1-minute time frame. For this, you have to wait for the market to give you clear displacement and a market structure shift after the liquidity sweep. Then we will enter on a breaker block and target our draw on liquidity. Then comes step 4, which is optional, and that is a 15-minute fair value gap. What I mean by this is, suppose we missed any entry here after the sweep. We will wait for price to displace and give us a 15-minute fair value gap, something like this. Then we will use this gap on a lower time frame to enter and target our draw on liquidity. The last and most important rule of this setup is the dealing range, which simply means premium and discount. For this, I want you to focus here. After the liquidity sweep, we will use the premium and discount from the high to the low that was created before our confirmations. Then we will mark out the discount range for long entries and use the premium range for short entries. For example, if we have a discount range like this, we will mark it out and look for a market structure shift here, then a breaker block, and we will enter on this. That's it. This setup is simple, and all you need to do is stick to the rules of this setup. One more thing I really want you to understand, and this is very important if you want to use this model correctly. For this part, I want you to carefully look at this range here. Now suppose this is a 15-minute time frame and price is forming structure like this. We can clearly see how the market is respecting highs and lows and building structure inside this range. At this point, our sell-side liquidity has already been swept here. Now after this liquidity sweep, a lot of traders make a mistake when it comes to premium and discount. What most people do is they immediately use external liquidity, meaning the very extreme highs or lows on the chart. But for this model, we are not going to do that. For using premium and discount, we will not use the external liquidity. Instead, we will always use internal structure. What do I mean by that? We will take any valid swing high or swing low, like this one here, and then measure it to whatever high or low was created before our confirmation. That confirmation can be a market structure shift, displacement, or breaker block setup, whatever confirmation you are waiting for according to your rules. Let me simplify this even more so there is no confusion. Suppose you get your confirmation right here at this point. Before this confirmation happened, price created a clear high and a clear low. So what we will do is take premium and discount from this high down to this low. Once we do that, we will simply mark out the discount range. Now remember, because this is a bullish scenario, we are only interested in buying inside discount. We are not chasing price. We are not entering in premium. We are only waiting for price to come back into this discount area. After marking out the discount range, we will wait patiently. Inside this discount range, we want the market to give us a clear market structure shift on the lower time frame. Once we get that market structure shift, we wait for price to form a breaker block. Our entry will be on the breaker block inside discount after the market structure shift. This way, everything aligns. Liquidity has been swept, draw on liquidity is defined, market structure has shifted, entry is inside discount, and once we enter, our target will be any high above, or simply the next buy-side liquidity resting above price. So the key thing you need to remember here is this. Do not use external highs and lows. always use internal structure. Measure premium and discount only from the range created before your confirmation, that's it. This is how you correctly use premium and discount in this model. Coming to the charts, I want you to look at this range. This is a 15-minute time frame. We can see we have a buy-side liquidity sweep. Sell-side liquidity is resting below, so we can expect a move towards the sell-side liquidity. Now the first step is to identify the dealing range, so we will use premium and discount from this low up to this high. As I told you earlier, we will not use the external low to identify premium and discount. Now what we have to do is simply mark out the premium zone because our bias is bearish, and we are expecting a run towards the sell-side liquidity. That's why we have to enter our positions only inside the premium zone. If price does not retrace there, we will avoid taking any entry. Now let's shift down to the 1-minute time frame. Let's remove the premium and discount. Now we only want a market structure shift and a breaker block in order to enter. Now we have a market structure shift here. We have these two candles to our left, which were the last low before the liquidity sweep. So this becomes our breaker block. Now we have all of our confirmations, and we are also inside our premium range, which means all of our rules are fulfilled in this trade, and we can enter. So we will enter right here, place our stop just above the recent high, and for targets, you can also take partials at this low right here and target the sell side liquidity. Now let's wait and see how it plays out. We got instant displacement to the downside, and it ends up giving us our target. This is the exact framework you have to follow when using this setup. Now let's remove all of this and shift back to the 15-minute time frame. We can clearly see here that we have our sell-side liquidity sweep. So now this high becomes our buy-side liquidity. We also have an internal high, so this is also a buy-side liquidity. This internal high can be used for the partials and even for targets in some scenarios if we get a good risk to reward. As I told you, we will not use premium and discount from this external high. We always have to use it from the internal liquidity level. But for now, we don't have our confirmations, so we can't determine our discount range. First, let's wait for confirmations on the 1-minute time frame. Now we have a clear market structure shift to the upside, so we can shift back to the 15-minute time frame and use the premium and discount from this internal high down to the last low. Now we will mark our discount zone because we are looking for long positions, and we have to only look for confirmations inside this range now. Whenever you are looking for long, you have to use the discount range, and for short, you have to use premium range. Dropping back down to the 1-minute time frame, let's wait for some displacement. Without strong displacement, market structure shifts are never valid. Now we have displacement, and we also have a strong market structure shift to the upside. We also have a breaker block to the left. This last high created before the liquidity sweep, once it gets displaced, it becomes our breaker block. Also, we are inside the discount range, so all of our rules are again met. So we will enter right here, place our stop below the recent low, and target the buy-side liquidity. This internal high becomes our first target, and we can take partials here and target the external buy-side liquidity. So you can also target the internal high if the risk to reward is good enough, but in this trade I will target the external high. Now let's see how it plays out in the end. Instantly, the market started moving to the upside and went sideways for a while, but in the end it gives us our target. This model works very well when you follow all the criteria which are given in the rules. I hope you have understood everything well and all the rules are clear for you. That's it for this video. I hope this breakdown helped you better understand liquidity, entries, and why trades get stopped out, and that it improves your overall trading performance. If you found value in this video, make sure to like, share, and subscribe for more ICT concepts, market structure, and real chart breakdowns. You can also join my Discord trading community for daily discussions and learning. If you're interested in mentorship or prop firm discount offers, all the links are in the description below. Thanks for watching, and I'll see you in the next video.